Prices in China's carbon market have hit record highs. Carbon trading allows companies to buy or sell emission credits, essentially taxing those who release more CO2 or other greenhouse gases. In China, the carbon price is now $14.62 per tonne, an all-time high since the market was launched in 2021. It's risen 35% since the start of this year, driven by efforts to promote green energy, as well as recent economic stimulus measures. The carbon trading price in China has now reached the same level as Europe's in 2018. Last year, the total trade volume in China's carbon market was nearly $3.5 billion. Currently, it only covers coal-fired power plants, but the government is planning to expand it across other industries, including cement, steel and aluminium. Well, let's talk to Luke Oliver, who's Head of Climate Investment at KraneShares. Good to see you, Luke. Welcome to the programme. So we briefly explained the idea of carbon markets there, but set out for us really what they do and what the idea is behind them.
Well, yeah, thanks for having me. I mean, very simply, putting a price on carbon, a carbon market, that creates a price incentive for companies to innovate and decarbonize their industry. So essentially, by putting a price on carbon, you get three very incredible impacts. The first one is that you generate revenue for the government that is auctioning those credits to market. Secondly, you get an incentive to use less of the most polluting fuels. So coal is the best example, which is the core of the Chinese market. And then thirdly, you create a massive drive of innovation and investment in green technology, because by putting a price on carbon, you're also putting a value on anything that reduces carbon or captures carbon from the atmosphere. So it's a very powerful market mechanism which allows a very sort of it's a very cheap and effective and efficient and also less disruptive way to shift companies away from polluting, basically using the same market mechanism that applies to every other commodity in the supply chain.
Does it really, though, shift companies away from polluting? Isn't it just moving the ownership of emissions around rather than perhaps reducing them?
No, it absolutely drives reduction in emissions. Now, in an economy like China, where we've got sort of exponential growth in so many places, it's quite a difficult challenge. So by putting a price on carbon, you're actually saying to companies, in the same way that those companies have to be conscious of their human resources, of their real estate resources, of every raw material that they use in production of their product, they are now optimizing, in the same way they do for all of those things, they're optimizing the amount of pollution they put into the atmosphere. So you're internalizing that previously free externality. And so what it does, it doesn't force an action on the company, but it does make them pay for the credits. And what that does is force the company, any company that's looking at its bottom line is looking to reduce its costs where it can. And it does two things. Very efficiently, the low-hanging fruit, the pollution that is just done because it's so cheap to do it, suddenly doesn't become economical. And then further up the supply chain, so think things much further down the line, like you mentioned, cement and steel, but even aviation fuel. We start to drive innovation that brings down the cost of greening those industries. So it really is as much about creating a disincentive to pollute as it is catalyzing innovation to bring down the future cost of some of those high carbon intensity industries. So it is been very successful. It's worked very well in California. It's worked very well in the European Union and the UK. And we've even seen it work very well in the northeast of the United States, where it also, like China, only focuses on power generation.
Well, let's talk about China, because its market, as we've seen, growing substantially, the cost of carbon rising. What does that mean in practice?
Well, in practice, so it's getting more expensive to pollute, and that means that it's becoming more and more effective for companies to look for alternatives. You're simply making the green alternatives more attractive, and you're also making spending on decarbonising more attractive than remaining in this sort of polluting status. So, what does it mean? We've seen that what the drivers, in fact, of why this price has moved so much, and I can kind of give you a sneak peek at where it could go. But at $10 a ton at the beginning of the year, up to around $15 a ton now, has come about because China has got closer to its deadline, so the companies that need to buy these need to make sure that they acquire them before year end. So we're seeing a bit of a squeeze as everybody runs to market. Secondly, China has announced that it's actually going to have real teeth in its regulation. It's not, I think previously it was about $4,000 fine if you didn't meet your requirement. Now that's going to be more like $70,000 fine, or $500,000 UN. So that's really tightening up the teeth of the market, which makes people more compliant, which makes people ensure that they do have the supply, and not just the supply of credits, but they put hedges on for their future usage. So that creates a lot of pull. And then, as you've mentioned, you've got the new industries that are probably going to be added by year end: aluminum, cement, and steel. So there is a lot of attention here. And then I also think it's also important to note that in addition to those new industries, there's been an announcement by the PBOC, CSRC, that financial markets should be brought to bear in this pricing. And if that happens, you're going to see financial players enter the market where they see an underpriced asset, and we could see these prices go much higher because the actual cost of polluting is significantly higher than the current price of carbon. So all of these things are drivers for price, and I think that's why we're seeing the beginning. And just to put it into context, Europe is trading at about 60 euros a ton. California is trading at about $35 a ton. So this $15 a ton in China is still very below the global benchmark.
Luke, great to talk to you today. Thank you for joining us on the programme. That's Luke Oliver, Head of Climate Investment at KraneShares.